I'm sure at some point in your trading path, you've come across the trading term priced in. So today we're going to discuss that. I have an absolutely beautiful example on the charts for you. We're going to dive into that, but let's first discuss what that means. So for those of you that don't know what a stock being priced in means, it basically means that no matter what news comes out, the stock isn't going to go down any further or up any further. It's generally talking about going down any further. That's the easiest way to kind of recognize it. Now, there are times, of course, when a stock is priced in where the price isn't going to increase anymore. And a really good example of this, or a way to look at it, and I'm sure that you've heard, you should never trade earnings. Well, there's a reason for that. Earnings is not as cut and dry as what people think. And I always tell people, just stay away from trading earnings. It's a complete guessing game. Now, you can be led down the path to believe, let's take Meta, for example, or any stock. It doesn't even matter. AMD, Apple, whatever. If you trade earnings on that, okay, and you think that they're going to do really well, and then the news comes out and it does do well. The earnings report comes out and it does do really well. It has blowout earnings, so to speak, but it doesn't do anything. Or it even sells off. And you say to yourself, oh, the market's manipulated, I knew it. Well, it is. We all know that the market is heavily manipulated, but you need to use that to your advantage. And you need to understand that it is manipulated, right? But that's not necessarily why it didn't go up. So it didn't go up because it was priced in. So let's say there was a bunch of news that came out just previously to earnings, maybe within that quarter, and it already went up quite a bit. It went up, I don't know, let's say 20 points per share. That becomes a fair market value for that stock. Okay, that's what the market considers fair for the price of that stock. So no matter what news comes out, it's not going to go up any higher. It's priced in. Now I'll give you another quick example and then we'll go into the chart so that you can see this for yourself firsthand, and it's going to stick out right at you. Now let's say when Elon Musk took over Twitter, a bunch of people claim that they left, or people left. We all know that not to be true. Users actually increased on it and blah, blah, blah. But let's say something like horrible happened. Let's say Elon Musk was caught up in a huge scandal, okay? And Twitter stock, X, dove. It sold off hard, okay? So now you're saying to yourself, oh, wow, with earnings, you know, they have decreased users, ads, people that are purchasing ads have bailed on them. They're going to have horrible earnings this quarter. I'm going to short it coming into earnings and I'm going to make a mint. Well, if everything was that easy, folks, do you really think there would be 90% fail as traders? No, everyone would be a multi-millionaire, billionaire, trillionaire. If it was that easy, everyone would be a billionaire, right? And then people will always use the excuse, oh, it's manipulated, right? That's not necessarily why. It's because the stock was priced in. Now, there's other factors at play, and it only doesn't have to do with just being priced in. But that's a good example as to why you don't want to be trading earnings. Now, there's other times as well, and on this, it has nothing to do with earnings. You can just tell because the market sold off and Apple did not want to go down any further. It's priced in, and it's a good place to start. Now, there's other things that can happen, and we're going to get into the charts here, and I'm going to go over, what some potential outcomes can be. I actually just went over this with my Momentum members last night. So let's dive right into the charts here, and let's rock and roll. Okay, so now that we are in the charts, we're going to take a look here, and I have 4 charts up, and this is what I want you to see. So I want you to take a look at yesterday's action across the board. Okay, now I'm going to wheel these out, And you can really tell with Q's. Q's yesterday sold off quite a bit. So this is roughly where Q's opened, right in here, if you follow my cursor. And it sold off a lot after hours. So from where it roughly opened to where it sold off after hours, it came down over 7.5 points. Now, SPY didn't sell off too much, but it did sell off after hours. After hours alone, this sold off almost 3 points. Meta sold off quite a bit too. So from highs yesterday down to lows of after hours is 18 points. That's 4.5%. So now let's take a look at Apple. Apple's really interesting. You can see when a lot of these stocks, the rest of these stocks, were selling off, Apple was consolidating. Now, it was consolidating at the 20 SMA, which is a midpoint moving average. Okay, and it consolidated there all day. And it would try and come up, and it would come down. It would break the previous low by just a few pennies. And then it would get bought up and would sell off, and it would break those lows just by a few pennies. That's called fishing for orders. That's fishing for buyers, okay? It doesn't want to come down any further. That tells me at this point it is priced in. Now you're going to see pre-market because I'm recording this quite early in the morning. Yes, it sold off a little bit more, okay? That's not a big deal. That is going to be because of the effect of the gap down in the markets, okay? Now, being priced in won't have any bearing on that, especially once it opens pre-market. It's going to have that gap down that the rest of the market has, okay? That can't be controlled. But look what happens the rest of pre-market. It starts coming up into that area, okay? Now it's coming back up, and it looks like a potential head bump. It's coming back up into previous support, now proving resistance. So it can, like, after recording this, if it does sell off, that tells me that today it is no longer priced in. And I told my members yesterday that, you know, this can potentially sell off. This is only 1 day's worth of data. It's a very small pool size or sample size, but it is telling us in and around this area, Apple is priced in anywhere between 189 and 187. It's about a 1 point range, okay? And the reason that we can really notice that is the rest of the market sold off hard after hours and during the intraday session. Apple did not want to come down anymore. It had multiple opportunities to sell off. It didn't want to, and that tells me it is priced in. So now how do we take that information and how can we actually benefit from it? Well, that tells me a few things. So if Apple is priced in here and the market sells off back to support, okay, so we just broke. Now take a look at SPY's level here, and I want to show you we have previous all-time highs right there. So with this sell-off, what's going to happen over the next little bit is I would have this as a target. We will most likely sell off to retest previous support, and that is major support, or here, okay? Because that's the high of that other range. So previous all-time highs was right in and around 480. It will come down, pull back to retest and prove strength to see if it wants to be above all-time highs, previous all-time highs. So follow along with me. If this pulls back into this area and holds that, Apple can do one of two things. If this is truly priced in, what Apple will do in the week that's ahead, that SPY and Qs will sell off to retest that level, Apple will consolidate. If Apple consolidates, that's telling me it is waiting. If SPY and Qs bounce off of that level, once it tests right here, Apple will launch. It will launch hard. It will come up hard and fast. Second scenario, let's say Apple is not priced in here. This is just a good example of us being able to recognize for the time being it is priced in. So let's say it comes down, it breaks that as we are pulling. We have the same amount of distance from here on Apple being priced in down to lows of this range right here, this previous double bottom or these moving averages. That is a perfect amount of distance right in there for SPY to pull back into this level. This is also a great video lesson on how to formulate a trade plan and stalk your prey. So that tells me if we do pull back and Apple is not priced in here, it will come down into starting around here where these moving averages are going to meet, or these lows. This is not a far distance away. It's about 2.5 points from the middle of these moving averages down to lows on a swing trade idea as SPY is pulling back into that. And if Apple does in fact want to break this priced in area, I will start averaging in here into these lows, because if SPY bounces, this will take a rocket ship launch on the way back up. Now, some of you may say, but what if it breaks? I don't talk in what ifs. I trade strategy. If you're someone that speaks in what ifs, well, what if it breaks? What if it does this? What if it does that? You're doing it wrong. I've had people comment on my videos saying a blah, blah, blah low from October is going to blow through. How? How do you know that, dude? What do you got, some sort of weird crystal ball, or what do you got? You got nothing. That is speculation and some sort of a plan based purely off of prediction, bias, and emotion. It's got nothing to do with reality. So I trade strategy. That's what I would do. That's how I would use this information. Apple can do one of two things. It is either going to consolidate, and we will know if it's going to consolidate over the next week or not. So if it consolidates, that tells us it is extra strong, extra strong. Okay? So when SPY and Qs pull back to retest previous all-time highs, if the market bounces there, it is off to the races. And that's how you can use this information. And this will give you a good idea after watching this of what to look for to recognize whether a stock is priced in. Adios, folks.